Hello, everybody, and welcome into Commodity Culture, where we break down commodities, markets, sound money principles, and geopolitics, all with the goal of making you a better investor in the commodities sector. My name is Jesse Day, and on this episode, I'm thrilled to welcome James Rickards to the program. An investment advisor, lawyer, inventor, and economist, and a New York Times best-selling author of books such as Currency Wars, The Death of Money, and his latest, Money GPT. Last time James was on the show, he was calling for $23,000 gold, and now that we've broken to new all-time highs, he reiterates his stance and walks us through how we get there. He also goes deep on the silver market and why he thinks the metal could run faster and rise more dramatically than most people expect. We also dive into geopolitics as James discusses why America's greatest enemy lies within, why Ukraine cannot win the war with Russia, the implications of a military defeat in that conflict, and so much more. So strap yourselves in for my conversation with James Rickards. James Rickards, it is great to have you back on Commodity Culture. I want to start by discussing the gold market because last time I had you on back in November of last year, you outlined a path to gold at $23,000. And as the gold price continues to push to new all-time highs, that prospect is looking more realistic. Give us your thoughts on the recent price action in the gold space and the catalysts that you think will drive us higher.
Sure. Glad to, Jesse. Nice to be with you. Obviously gold's been going up. It's up well over 200%, more like 250%, just in recent months. And you go back over longer time frames, it's a lot higher than that. We're in a major gold bull market. The point I make is that this is going to continue, and a lot of investors ask me, say, "Well, hey Jim, you said buy gold when it was 1,500. It's 3,700, kind of teasing around $3,800 an ounce right now. Did I miss the boat?" And my answer is, well, you missed $1,300 worth, but no, or sorry, $2,300 worth, but no, you did not miss the boat. This rally is really just getting started. There are three main drivers. The first one is central bank buying. Now, 2010 was the year of inflection, meaning from 1970 to 2010, central banks and finance ministries, basically official institutions, were net sellers of gold. Beginning in 2010, they became net buyers of gold. Now, different central banks involved, Switzerland, UK, Australia, Canada were all sellers, still are. The Swiss have stopped selling. Canada, I think, sold all their gold. Not saying I have a treasure chest, but I think I have more gold personally than the government of Canada. So those some of those countries are still sellers, or at least they've kind of dialed it down to zero. The buyers are new. They're Russia, China, India, Japan, believe it or not, Turkey, Iran. Iran's not transparent, but there's a whole set of buyers out there. Vietnam, for its size, is buying a lot of gold, and they continue to do so. Now, central banks, to be clear, they're very savvy buyers. They're not going to drive the market a lot higher by themselves, and they don't want to. If you were a buyer, why would you want the price to go up a lot? You'd say, "Hey, I'm still buying, so I just as soon keep it low for a period of time." But what they do is they put a floor under the market. They buy the dips. I hate to use cliches, but they do buy the dips. They put in standing orders. Russia for a long time was sort of 10 tons a month. Put in the orders with dealers in London. They don't want to disrupt the market, et cetera. But if you're an investor in gold, if you're any an individual, everyday American, or hedge fund, whatever, and you're interested, you have limited downside because the central banks are putting in a floor, but unlimited upside for reasons we'll talk about. So that's what I call an asymmetric trade. It's a very nice trade. The second reason is, good old-fashioned supply and demand. You learn in your first week of economics courses. Might be the only thing you learn that's really valuable the way they teach it these days. But global output has been flat around 4,000 metric tons per year. That's all the mining in the world for about 6 years. Now, I'm not saying peak gold. It hasn't gone down, but it hasn't gone up. Just a little bit around the edges, but not very much. Right around 4,000 metric tons a year. So if you have constant supply, which we have, and increasing demand, which we do, that means the price goes up. It's just, flat supply, increasing demand, price goes up. It's pretty much that simple. The third factor is that people say, gold's an inflation hedge. It can be an inflation hedge. The correlation between gold and inflation is less strong than most people assume. But I call gold the everything hedge, meaning, will it hedge inflation? Yeah, it actually hedges deflation. People don't understand. During the Great Depression, the best performing stock on the New York Stock Exchange was Homestake Mining, which was one of the largest mines in the world at the time. That's actually the foundation of the Hearst fortune, going back to George Hearst in the late 19th century. But I visited that mine. It's out in Lead, South Dakota. It's an open pit mine and an underground mine. They're not producing now. They produced up until around the year 2000, but certainly in the 1930s, one of the largest gold mines in the world. That stock went up at a time when the Dow Jones Industrial Index fell 82%. From October 1929 to June 1932, which was the bottom, almost 3 years, the stock market fell over 80%, but Homestake Mining went up, and it was the best performing stock on the New York Stock Exchange. Gold itself went up 75% during the Great Depression. It went from $20.67 an ounce to $35 an ounce, which, measured in dollars, that's a 7% increase during the greatest sustained period of deflation in U.S. history. So the history of the Great Depression says when stocks are crashing and deflation takes over, gold goes up significantly. So it hedges that. It also hedges inflation because, again, as we saw in the late 1970s, in 1979, 1980, inflation was 13, 15%. U.S. Treasury notes were yielding, 10-year maturity was yielding 15%. You could have bought a 10-year Treasury note that would pay you 15% a year for the next 10 years. But from 1971 to January 1980, gold went up 2,100%. So it hedges deflation, it hedges inflation, it hedges social unrest, natural disasters, civil wars, regular wars, et cetera, and uncertainty in general. So it's very good in that sense. And one last point, Jesse, and kind of why I see this continuing and getting to much higher levels. There's a little bit of math. I mean, you can do calculus if you want, but I try to keep it around the fifth grade level because there's no need to be more complicated than that. There's a behavioral psychological phenomenon called anchoring. And anchoring just means, we're all humans. We all have biases, which are usually a good thing. It kind of kept us alive for a couple of million years. But an anchoring bias is you get a number in your head and it means something and you anchor on it and you kind of filter out other data around it. So people obviously who own gold look at price increases, and let's just take big chunks, $1,000. $1,000 an ounce is a lot, but we've been seeing it go up $100 an ounce every couple of days for the past month or so. But let's just take bigger chunks, take $1,000. When you go from $2,000 an ounce to $3,000 an ounce, that's a 50% increase. When you go from $3,000 an ounce to $4,000 an ounce, that's a 33% increase. And when you go from $4,000 an ounce to $5,000 an ounce, that's a 25% increase. The point is, there's still $1,000 leaps. And if you have 50 ounces of gold and it goes up $1,000 an ounce, you just made $50,000. And people think of it that way. They focus on the $1,000, or in my example, the $50,000 gain, and they're like, ka-ching, ka-ching, that's great. But what they don't realize right away, because they just don't think about it, each one of those $1,000 gains is easier than the one before because it's the same $1,000 gain, but it's a smaller percentage gain because it's calculated off a higher base. So going from $9,000 to $10,000, that's only an 11% increase. I mean, 11% is kind of like a good month these days. So my point, and this is where you get into the frenzy stage. We're not there yet. We're getting closer, but all of a sudden it's going to go 8, 9, 10, 11. And those $1,000 chunks those $1,000 leaps are going to keep getting easier because they represent a smaller percentage. When you go from 20,000 to 21,000, that's only a 5% increase. Which is a good week. So that's one of the ways you get there from the perspective of $3,800 an ounce or $3,700 an ounce, where we are now. $23,000 seems like I'm asked the far side of the moon, but actually, as you get closer to it, it gets really easy to see that kind of spike. So yeah, that's my forecast. Those are the reasons behind it, and they're not changing. If anything, they're getting stronger.
The sponsor of today's episode is ARC Silver Gold Osmium. Owner Ian Everard is praised even by his competitors as one of the most honest and level-headed bullion dealers in the United States. They have some great prices. You can see some of them displayed right now on screen. Take advantage of these specials today by reaching out to Ian at 307-264-9441 or by email at ian@arcsgo.com. Make sure to tell him, of course, that Commodity Culture sent you. And now, back to the interview. Fantastic breakdown. I want to touch on silver here because as gold is breaking out to new all-time highs, silver is also quietly in its own breakout, now sitting around $44.70 the last time I checked today, heading towards 45, outperforming gold by around 10% so far this year. Is it time to potentially look at silver as a metal that could rise faster and more dramatically than people could expect?
Definitely. I own gold, but I own silver too, and I recommend it. Silver is a little bit more difficult to analyze because, gold is not good for anything except money. So if you like money, have some gold. It's obviously a precious metal, but the industrial applications of gold are very few. Silver is different. Silver has a lot of industrial applications. But it is a precious metal. So you have to think of it as a precious metal money on the one hand, and industrial input on the other. Those can be moving in different directions. Obviously, the precious metal aspect is driving silver higher, but as we get into what looks more and more like an industrial recession, that could be a drag on silver use. But let's focus on the precious metal side. A couple of things about silver. Number one, it tends to lag gold. There's no way that gold's going to the levels I'm talking about and silver is not going to go to $100 an ounce. If you see $20,000 gold, you're going to see $100 silver or more. But silver tends to lag a little bit. The gold takeoff happens and it makes all the headlines and people get spun up. And then silver's just kind of sitting there like, what's wrong with silver? And then all of a sudden, silver starts to move. So I think you're exactly right, Jesse. We're in that mode right now. But it plays catch up. So silver could actually go up faster because it took longer to take off. So I think the way you described it is exactly right. But silver has a very important monetary use that I would say makes it even a little bit easier than gold, which is it's more practical. If you had a crisis and you had, people lost confidence in money or, an electric grid breakdown and we had to kind of use gold and silver to feed our families, so to speak. Silver is a lot more practical because if you have a 1 ounce gold coin, let's say, okay, that's valuable. It's a form of money. It's bullion. But if it's worth $4,000 or $5,000, as we're describing, that's an awful lot of groceries. If you want to go out and get food for your family, a silver ounce or 5 silver ounces, which today would be $200, that's about the right amount of money to go shopping, in other words. So I recommend people have what's called a monster box. A monster box comes from the U.S. Treasury. It's the U.S. Mint, but of course the U.S. Mint is regulated by the U.S. Treasury. It's Treasury green, has a compression strap in it. Inside, in sleeves, plastic containers, are 500 1-ounce American silver eagles. They're pure silver, no alloy, beautiful design. But the point is, with 500 of them, that could be walking around money, as we say in Philadelphia. That could be spending money to feed your family, whereas gold will preserve value. By all means, have gold, very valuable form of property, but gold could almost be too expensive in terms of trying to spend it on the street. But silver, when I was a kid, even a young adult, we had silver dollars were common, at least be on your 21st birthday, some aunt or uncle would give you 21 silver dollars, cost $21. Today that would be $800 worth of silver or more. As silver's taking off, It's lagging gold, but it's going to catch up. It's going to do very well, and it's also a very practical metal to have for basically spending purposes.
Well, we're going to move a little bit into the realm of politics as well as geopolitics, two areas you're extraordinarily well versed in. You mentioned recently in an interview on Bannon's War Room that the greatest threat facing America today doesn't come from foreign adversaries, but from within the country. Can you walk us through your thought process there and how this enemy within can be dealt with?
Well, yeah, I'd be glad to, but you don't need much of a thought process. You just need to read the headlines. I mean, we saw the tragic assassination of Charlie Kirk by, well, allegedly, although he's pretty much confessed to the murder. This kid from Utah, I guess he was 21, 22 or something. Yesterday or a couple of days ago, there was a sniper attack on an ICE detention center. The sniper, again, I think he was like 20 something, maybe a college student, but he killed two people, wounded others, and then committed suicide with his own rifle. But I guess he didn't know what he was doing. I mean, he was anti-ICE, and we know that because he carved, anti-ICE messages in the shell casings, but he was shooting the detainees. Maybe he didn't know the difference, but I mean, they're all innocent. They're all innocent targets. It's all a tragedy. But he didn't even, kind of get the right targets. We're seeing this more and more. We're seeing it all over, and it's not. I'm tired of hearing the lone wolf, the random shooter, et cetera. I'm not saying that every one of these people was part of a conspiracy that sat down and figured this out, although some of them may have been. But they're definitely vulnerable to and subject to a lot of encouragement and coaching from various, online services. They're not that hard to find. I mean, people call it the dark web, but it's just the dark web because they have a lot of servers in between, the end user and the one propagating the information. But I'm very critical right now of the Justice Department, of Pam Bondi and Cash Patel at the FBI. Why aren't you shutting these people down? I mean, I did counterterrorism for the CIA for 10 years. My expertise was financial warfare, I did financial counterterrorism. I did a lot in the sanctions area. I did a lot in foreign investment in the U.S., basically going out and doing collections to see if the foreign investor was a friend of the U.S. or an enemy or fronting for the Communist Party of China, et cetera. I was immersed in this. I still do a lot of it privately, but as I said, I did it for the CIA for over 10 years. And I know how to do this stuff, but other people do too. I'm not saying I'm the only one. My point is you can freeze the money. You can seize the money. You can interdict the flows. You can shut down some of these websites. I know, you're entitled to First Amendment protection. Yeah, I happen to be a lawyer also. I study constitutional law, but you're not entitled to First Amendment protection if your conversation is designed to kill somebody. That can and should put you in jail. So where's the Justice Department? Why aren't they tapping into resources like the National Security Agency? I mean, they monitor everything. Somebody's monitoring this podcast. Okay, sorry, bragging to the audience, but they are. They're monitoring your iPhones, your GPS. They know where you are. Okay, I'm not saying that's always a good thing. I am saying it's true. And so why isn't the Justice Department tapping into some of those threads for criminals? These are not. This isn't like the Biden administration where they went after innocent people who just happen to be political enemies. This is going after actual criminals who are prompting actual crimes. So, the thing is, we know who our foreign enemies are. China's the main enemy. Russia, they're a bit of an adversary, which is too bad. I think there's a natural alliance between the U.S. and Russia. The U.S. and Russia should have a rapprochement. I'm not saying we have to sign treaties or be best friends, but we should at least have an understanding and a mutual working relationship designed to isolate China. India should be a very good friend. Why is Trump putting secondary tariffs on India? Because they trade with Russia in connection with the Ukraine war sanctions. Why do we care about Ukraine? That's a war. I mean, the United States caused that war. Everyone says Russia invaded. Russia invaded after 17 years. 14 years of provocations, starting with George W. Bush's Bucharest Declaration in 2008 when he said Ukraine should be in NATO, Obama's CIA MI6 coup d'etat in 2014 with the fake Maidan Square demonstrations, and they sent in neo-Nazi sharpshooters to kill innocent people just to get rid of the president who was too pro-Russia for the liking of the neocons in Washington, and so forth. We caused the war. Now we've got the war, but it wasn't Trump's war. This was the Democrats. Democrats and Republicans. I would fault Bush, but really Obama and Biden I would fault the most. Remember, Trump got impeached in 2019 for a phone call with Zelensky. He was just trying to, make some inquiries about bribery and corruption in Ukraine, including the Biden family, and for that he got impeached. But the message was, don't mess with Ukraine. Well, but now it's becoming Trump's war. Trump had the opportunity, in effect, to get out of this war, and he failed to do so. And to me, it's very, very much like LBJ in 1965. Lyndon Baines Johnson didn't start the war in Vietnam. It was started by Eisenhower and carried on by Kennedy. Johnson inherited it, but he made it his war and ended up destroying his presidency and withdrew from the race in 1968. Well, that didn't have to happen. He could have. There was never a better time, or hardly a better time, to get out of Vietnam before the major escalation started in 1965. So I think Trump's making the same mistake as LBJ. He inherited a war. Nobody blames him for it. It wasn't his fault. He had the opportunity to get out. He's failing to do so, and now he's getting kind of sucked into it with the neocons, bloodstained banners, as they call them, people like Lindsey Graham and others. So that's a major mistake on his part. My point is, we know who the foreign enemies are. We know who the adversaries are. We know what the issues are. What we don't know is about the internal enemies. And the point I made on Steve Bannon's War Room, as I said, nobody invaded France during the French Revolution. That was the Jacobins were French lawyers, basically. Nobody invaded Russia during the Bolshevik Revolution. That was internal radicals, Lenin, Stalin, Trotsky. I mean, Lenin was, kind of shipped in by Switzerland, but he was doing everything in St. Petersburg and Moscow. So the so-called fifth column, the enemy within, is your greatest enemy. You don't see them coming. We need to do more.
Well, I definitely want to pull on that thread regarding the war in Ukraine being Trump's Vietnam, because it's been a bit of a mess with him, of course, pledging he was going to end the war as soon as possible after getting into office. And since then, it's been a bit of a back and forth between him favoring Putin or favoring Zelensky, at least in his outward social media posts and in the media. Who knows what's going on behind the scenes? We're caught in a stalemate here where neither side is willing to accept the other's demands. And now Trump appears to be doubling down on the side of, actually, not only can Ukraine win this war, they can take all their territory back, which according to most analysts I've spoken to seems a bit outside the bounds of reality. But I wonder what your thoughts are there. How do you think this conflict ends? And if you see it ending in a military defeat for Ukraine, what are the implications for NATO, the EU, and the United States?
Well, yeah, there's a lot to unpack there. I mean, just to be clear, I support Trump. I voted for him like 6 times. I live in New Hampshire, so we have a very big primary scene. So I voted for him in the primary election and the general election. So I'm a big supporter of Trump, and I think he's doing a lot of things right. Having said that, his foreign policy is amateurish at best and a little bit dangerous. They kind of don't know what they're doing. They don't know diplomacy. Trump may master the art of the deal, but he doesn't understand the art of diplomacy or the art of war. So I'll give you some examples. Trump had this summit meeting with Putin in Alaska. Well, that was good. It was great that they talked, and I'm glad they kept the riffraff, the European vassals and others out of the room. But Trump went in, and the benefit of that meeting was that he was talking to Putin unfiltered. By the way, I'm sure they had translators. Putin's English is just fine, so they most likely spoke in English, even though there were translators there. But Trump got to hear Putin for the one-on-one, no filters, no Marco Rubio, no Lindsey Graham, no Steve Wyckoff, as I say, for the first time. Now, Putin's, you can call them demands, okay, conditions haven't changed. He laid them out before the invasion of Ukraine in late 2021. He repeated them after the invasion. They almost got to a peace treaty in March and April 2022, just 30 to 60 days after the invasion. And then Boris Johnson went to Kiev and told Zelensky, if you sign this, forget it, we're done with you. And Zelensky said, okay, and they blew up the deal. But they had a peace treaty in March, March and April 2022. Putin gave a major address to his foreign policy officials and Russian think tanks and establishment figures in the summer of 2024, a year ago last summer, and he said the same thing every time. He said, conditions no for Ukraine, no NATO, you have to be neutral, demilitarized. You can have a kind of paramilitary police force like the federales in Mexico, but no large army or military that's capable of doing anything to any of its neighbors. And denazification. I mean, to get the Nazis out of government, and just so that they play no role. So demilitarization, denazification, neutrality, no NATO, and then of course they keep Crimea. Now, what has changed? And Putin said this just a couple of days ago. He said in Alaska. That was my point. Has anything changed in Putin's position in the last almost 4 years at this point? One thing: they get to keep the territory that they've taken. They're keeping Crimea, Zaporizhzhia, Kherson, Donetsk, and Luhansk. Collectively, the last two are known as the Donbass. They're keeping all that because they fought for it and they took it, and Ukraine lost. Now, so what? My point to Ukraine, my message to Zelensky is: the longer you keep fighting, the more you're going to lose. Meaning, they're not winning the war. They're not beating Russia. That's not happening. I know Trump said that, but that's pretty. I don't know what he was thinking. I would say it's delusional. If he had some hidden agenda, maybe. But Russia's not giving any of the territory back, and Ukraine's not taking it back. So what could change if the war continues? Well, Russia will take more territory. There's a province called Sumy, which is north of Kiev, and that's where Zelensky launched this. Zelensky invaded the Russian Federation. He invaded Kursk. He actually put his best troops in there. And the Russian way of war, not many people understand it, but it's slow, methodical, and lethal. They take their time. They're not working on your schedule. They don't care about holidays and commemoration or deadlines or 90-day ultimatum that Trump likes to throw around. They don't care about any of that. They care about winning. And what they do is they surround the target city. It was, Mariupol was first, then Bakhmut, and then Avdiivka. Now they're surrounding Pakrovsk. But the point is they surround it first, which can take a year. You got to capture every village and every road, every place in and out. But once you do that, you've cut off whatever troops are in the city and the target. They're cut off from resupply. They can't evacuate. They can't get out. They can't get any supplies in. And then the Russians give them a chance to surrender. And Zelensky says, don't surrender. And the Russians are like, okay, well, then we'll kill you all. And they do. So that's how this war has gone and how it will continue to go. Now, if you're Zelensky, you're supposed to say, okay, fine, let's do a peace treaty. You can have everything east of the Dnieper River and south of Kharkiv, and we'll keep the rest and call it Ukraine. But if you don't take that deal, then they're just going to keep fighting, and Zelensky's going to keep losing. It would take nothing. It would be trivial for the Russians to assassinate Zelensky, but why would you? He's an idiot. If you're fighting an enemy with an idiot in charge, you want to leave the idiot in place. You don't want to get rid of him. So they're very happy to have Zelensky as, well, he's not president. That's the other thing people don't realize. They say, we're fighting for democracy in Ukraine. That's nonsense. Zelensky's presidential term expired in May 2024. So he's a year and a half into a military dictatorship. So there's no democracy. He is a military dictator. They're utterly corrupt, and they're losing. What's not to like, if you're Russia. So I don't know what Trump is thinking. His comments made no sense. They're very amateurish at best. although he did, just to add to what you said, Jesse, he did say one thing that was very interesting. And you're right. He said, I think, I'm paraphrasing, but I think Ukraine can take back this territory with some support from NATO. They can regain the territory that's been lost to Russia. He did say that. But then at the end of that sentence, he said, and I wish them well, which is kind of a way of washing his hands of it, saying, yeah, good luck, Europe. Good luck, Ukraine. Keep fighting. Get your territory back, but don't count on us. Well, that's a big deal. Now, he didn't, again, he used the phrase I used, I paraphrased. He didn't say, well, we're suspending, weapons sales to Ukraine. I mean, what we're doing, what the United States is doing is we're selling weapons to NATO, and then NATO's supplying them to Ukraine. So in the strict sense, the U.S. isn't supplying weapons to Ukraine. There's no congressional authorization for that as of now. There was before, but not now. But there's no prohibition on selling weapons to NATO. Begs the question, where's NATO getting the money? Because most of their money comes from the United States. And then they're stealing. They're in the process of stealing $300 billion of U.S. Treasury securities legally purchased by Russia. Now, at this point, most of those securities have matured, so you're sitting on a big pile of cash, but still the Russian cash. If you buy a Treasury note and it matures and the Treasury sends the money to your bank account or your brokerage account, it's still your money. But the NATO's in the process of stealing that to underwrite loans to Ukraine so they can fight Russia. So Russia's own money has been stolen to give to Ukraine to fight Russia. How much confidence does that inspire in the U.S. Treasury market? If you're Saudi Arabia or Taiwan or Japan or China or anybody else, and you're like, hey, what if the U.S. doesn't like what I'm doing? How do I know they're not going to steal my Treasury securities, et cetera? I'm not saying the Treasury market's going to collapse. I'm not saying that at all. In fact, actually, it's been pretty strong lately. I'm just saying that the more you weaponize the dollar, the more you drive people to figure out the alternatives. So obviously Trump's Ukraine policy is a failure. He heard Putin loud and clear. He walked out of that meeting in Alaska and said, "Oh, there's not going to be a ceasefire." Well, he's right, but Putin had been saying that for 2 years. He said, "Why would you agree to an unconditional ceasefire if you're winning?" I can understand the loser wanting a ceasefire so they can, rest their troops and get supplies and, get ready to continue the fight. But why would the winner want that? And the answer is you wouldn't. And Putin has said that. And I guess Trump heard it and said, yeah, I guess there's not going to be a ceasefire. Well, why didn't someone tell him that? It was pretty obvious. And then he said, Putin has these conditions. He wants to go to a full blown peace negotiation and peace treaty. Okay. But Putin's also been saying that for 4 years. There was no news there, except the president seemed to hear him for the first time. Wyckoff, I don't, again, I don't know him personally. People say he's a nice guy, very smart real estate deal maker. I don't doubt that for a minute, but real estate and war are two different things.
Fantastic analysis. As always, James Rickards, thank you so much for coming on the show. Before I let you go, tell us about your latest book, Money GPT, and if there's anywhere else you'd like to direct people online, feel free.
Thank you. Yeah, my most recent book, Money GPT, AI and the Threat to the Global Economy. It's about artificial intelligence, obviously, and GPT in particular, which is it's a technology that was turned into an app by OpenAI, but everyone's got one now. So Microsoft and Google and Facebook and OpenAI, Apple, they all have their little artificial intelligence robots. But artificial intelligence is real. It's everywhere. It's powerful. It will do some good things. I don't dispute any of that. The point of my book is to issue warnings about a lot of the dangers, particularly in capital markets, how it could accelerate and amplify stock meltdowns. There's nothing new about financial panics. They've been happening since at least the 14th century. But when you put AI into the kill chain, the decision-making chain, and outsource your investment decision-making to AI, you can get some very, very negative results. I also talk about nuclear warfighting, and it does end on a good note, which is there's not going to be super intelligence or artificial general intelligence. That's the world where humans are to AI what apes are to humans. We're sort of like these slaves to these computers. That's not going to happen. I explain why, but a lot else could happen, and that's all in the book. And also, if you want to follow me on X, it's at Real Jim Rickards, at Real Jim Rickards.
Great. Well, I will put a link below to MoneyGPT as well as your X account so people can follow along. Thank you so much, James. It's been a blast.
Thanks.
And thank you for joining us today. This episode is brought to you by ARC, Silver, Gold, Osmium. Take advantage of their specials. They are displayed on the screen right now. Reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com. Make sure to tell him that Commodity Culture sent you, and be sure to pick up your Commodity Culture merch using the link in the description below. Everything backed by a 100% quality guarantee. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.